Good morning, guys. Welcome to this Thursday, March 5th. And we got a market still in a holding pattern. I got a little bit more news coming out today, though, but it's so far we are in a holding pattern. We are back up after this knee-jerk reaction here to Monday, Tuesday, Wednesday. Primarily Monday, Tuesday. Yesterday was a pretty strong day. We kind of just got back here. So if I fold this stuff back together, the rotations down here, you can see that we are right here in this area of value. We're a little bit below the the highs, but pretty much at the upper end of the range. So it's not like we backed off a whole lot. So we are down here building value, and that's kind of in a holding pattern, I would say, at this point. And now just matter to see how long does this war go? What happens? What potentially could be the fallout? Anything commodity related, oil related, obviously is going to be hitting oil, but it's in terms of the market, I think the market is just going to be in a holding pattern for a bit, and then probably going to we're going to find a either direction up or down here. I'm thinking that the most of the crazy selling or weakness is kind of past us. I just get a sense that if they would have taken it lower, I mean, they've been had all February here now to mess around, and several times they really tried to take it lower, and got it kind of pretty scary for a while there. But so far we haven't really fallen apart, and there hasn't been a lot of follow through on the downside. So range bound we are sitting here twisting in the wind, waiting for a piece of news or another leg higher or lower. Could it be lower too? I don't think lower is really. I mean, lower can happen, but I don't think it's structurally any reason for it. I mean, the earnings season has been great. The economy is good. We're going to find out on the labor market by Friday, but you saw the ADP report came out yesterday. That was decent. So overall, it's not a lot of warning signs in the economy that something is really bad. I mean, it could be a currency crisis or something like that coming, the faith in the dollar or something like that. But right now, I'm not hearing a lot of whispers about it. I mean, the stuff I keep hearing about is you really have to roll the debt at these higher yields could be an issue. But overall, I think we have some tailwinds, and the market is kind of holding them together. Hence, it's staying in this range, building value, kind of waiting for the next event to take us higher or lower. So the news we have coming out today, the challenge job cut report came out, 48,000. The last one was 108. Now it's 48. Jobless claims at 8:30, productivity also, and import-export prices all coming out at 8:30. Nat gas report at 10:30, and that's it. That's all we have, 8:30 today. And then on tomorrow we get the employment situation and retail sales coming out right in the morning at 8:30. So tomorrow is going to be crazy morning, or could be, has the potential to be pretty crazy. But today, jobless claims, productivity and costs, import-export prices coming out at 8:30. So I would start off range bound again, look to fade the edges. It's been a pretty well working dynamic. But you get some a day like yesterday, you see we had pretty much strength all day, and then they ran out of gas and they didn't go anywhere. And then that's not a bad scenario at all. I mean, it feels like a very strong day, but you're still just trading in a range. So it's you're up here against these upper areas. Now the overnight is kind of backing off a bit. Yeah, I would not be surprised if we see more a risk-off day, but you see they take it down to the lower end of the range, and back and forth we go. So back and forth, range-bound trading, and that sets up nice opportunities. So now you can look at fading the edges when you start approaching the 68.80, 68, 68, 9 or 67,000 here. Sorry, 69,000. Come on, 68, 80s, 6900s. 69.10s, 69.20s, 69.30s. Approaching these areas, just looking for short setups. And then when they start taking it lower, heading down towards the 68.40s, 68.30s, 68.10s, you start looking for buying opportunities down to that 67.95. They start taking out this 6800s. That's going to be this lower range. That little area on the F1 comes out, I would be more inclined to lean in on the short side and see if they can run it all the way down to the 67, 60s. So those are the two levels to lean against. But that's kind of the dynamic. So I would be I'm going to try to be a lot more patient. I tend to be more aggressive when it starts moving, especially when the market is moving. You want to get on that move, and it just you get on the nice trending move, you'll be all happy, right? The problem is it's so freaking volatile at the time, so you can get in and you get out. You kind of have to buy the low or sell the high. Sorry, you had to do a go with trade, so you had to buy the high or sell the low, and it's just a shitty trade. It is an easy trade because you just have to you just hop on the bandwagon, right? And then, but the problem is that you get in, and even if it goes a bit in your favor, you always have a counter rotation which keep knocking you out, and it's frustrating like hell to see that happen. It's a much better trade to wait for the edges when you start approaching one of these support areas. Start looking for it, and you can have support areas build intraday as well. So you can watch these. The first and second, you have the let's go back here. So you have the initial balance, high low. You have the mean. You have the mode. You have the first and second standard deviation. Those are intraday's levels worth looking at. But so if there's a tight day and you don't really approach it a lot of levels, then you can fall back and lean at those. Even if you're an intraday kind of day, or you're looking at inside the trading range for the day, when you approach the outer edges of the session. So in other words, even if you're not down by a support or resistance areas outside the range, but even inside that range, you're heading down towards the lower end, at 68.55 in this case, 68.45. Those are your prime areas to get started with, and it's and then same story here, looking for shorts against that 68.80 and the 6900. So those are the initial levels to pay attention to, and that also gives you a sense that if the market is going to be trying to take it lower, or they're going to try to push it higher. In other words, are they flirting with the upper end or lower end of these ranges? So there's plenty of opportunities in a range bound market, but the trade you're really looking for is fading an edge back towards the mean or backing off an edge. And same what happened yesterday. I saw that took an edge. I mean, you have these opportunities all the time. Right? This happened to be not an obvious edge by any means. This is up at the 68.80s. So yeah, almost. But you're up here again. You see a run up here. If you're in a resistance area or support area and you approach it, you take the aggressive entry. Just be prepared for a counter rotation. Most of the time you get it. So you have almost a break-even trade, then you get a counter rotation back up again, knocks you out. It happened to me yesterday. Very obvious one, right smack in my face. And so almost the better trade is almost to wait for it to back off and then get short on that in this case then against this the counter rotation. And if you're wrong, they'll just run over you and you can have a pretty tight stop and just protect yourself. So I'm going to try to be a little bit more precise on that one going forward, instead of trying to take the obvious aggressive edge, because you almost always get that freaking counter rotation. The times you get in a move like this, yeah, they run it up and they just run it straight down again. Yeah, you'll miss those. But if the time they run it up here like this, counter rotate comes back up again, you can get short, a little bit of heat to fade it, and then you have a nice move going for you. So retest failure trades, the classic setup for a retest failure trade. It works a lot of the times, and it's that counter rotation you want to get in on. So anyway, so that's a couple of little tips. At least of what I'm going to be working on here throughout going forward, because I'm trying to get on better trades. I'm trying to get on bigger trades, and you keep getting, when you're wrong, you get stopped out. Right? You get stopped out. You lose the whole amount. If you're right, you get just a little bit because you keep getting shaken out. So the math doesn't work there. It's just you want to be getting on a bigger trade and then be able to ride it a little bit before you have to take profit. So I would start off on the ES looking for sell strength against the 68.80s, 6900, 6910, 6920, 6930s for rotations down. And on the way down, I would look to buy against support 68.55, this would be aggressive. 68.45s, the 30s, 20s, and 10s for rotations back up again. That's how we approach the ES this morning. On the Nasdaq, those levels are the same approach. But those levels are going to be on the Nasdaq. You're looking to sell strength against the 150s, the 200s, and the 260s for rotations down. We're going to buy weakness against the 25,000s, 2970s, and then you have a potential little move to the downside before you hit the 890s, 850s, 800s for rotations back up again. You can see Nasdaq swinging wildly up and down here. So there is no shortage of swings on the Nasdaq, that's for sure. And that's just it is a difficult market to trade. The Nasdaq here, you see they swing quite a bit. Now they've been up here flirting in this upper range again. Now they're back down below this edge, the 120, 130s. So as long watch that edge, watch this edge here. If they trade above it, look for a move up here towards the 450, 500s. If they trade below it, just look for rotation back down here to the 890, 900s, which is your attractor on the downside. And it's not that far away. It's right down here. So that's why I would look for buying opportunities against that 880s, 850s, and the 810s for rotations up again. That would be just backing off back to that midpoint. And we'll see what kind of day we get. I mean, sometimes you get the start off like this, meandering around, and then you get the sell programs kick in, and it's always faster on the way down. It's always easier to sell, and it always begets selling. Buying is also good, and it tends to work pretty good, but most of the progress on the upside is grinding, like a good day, and then grinding. Then you have elevator down days where they reverse like 3 weeks of progress in a day, So you have to just take that for what it is. Getting on a short trade usually can become a little bit bigger, but right now we're just doing this as a range band market. So that's how we get started on the ES and the Nasdaq. Looking at the bonds, bond market is down again. So it had this big run up the other day. I thought that was kind of a pretty good spot to stall the whole thing. But look at this overnight. They just took it way down here. They sold off a little bit in the afternoon down here towards the 116.24s, and the overnight took it all the way down to 116. So we're not that far away. So I'm thinking that they're heading down to that 115 attractor area right now. That is pretty much what they're doing. So they're down here at that low volume area right now. They're heading down here to this attractor. And it's just a slow meandering move down. And most likely heading down to that 115.10 attractor. So that's where we are. And I would just start trading it from the short side initially. It's not going to be super aggressive. As you can see how this range looks. And watching for these support areas to potentially hold. But initially I'm starting with a short bias, looking to sell strength against this 150, also 116, 15, 16s, the 24s up to the 1630s for rotations back down. If we get some early strength, going to look for that, but see if I can get short for rotation back down again. And I hope I don't get run over. It's the same as the last time when they took a level up and then that's absolutely creamed it after that. That was ugly the other day. But then again, that's how it is. You kind of have to kind of trade your plan and then adjust if it really doesn't work or if something does change in the dynamics. All right, so we got about 10 minutes before we get news. I'm gonna go get refresh my coffee. Back to the ES and the Nasdaq and the AS twisting where they are. So we'll see how that goes. Now, if you look at my chart, you see a little gap here on the at around 7. I restarted the whole thing. That's why you have a little gap there. I'm not going to rebuild those, but don't need to rebuild that to get any value out of it. So anyway, so that's if you wonder why that little big gap is going on my third pane there. But anyway, we'll leave it there, guys. So good trading. And we'll see you back at 11:30 for the next update. And let's see how this whole thing goes. All right, guys, later.